and a very warm welcome to your weekly technical update, your guide to the charts that matter this week. I'm Nadine Blaney. Well, we're going stock specific this week to consider how a healthcare giant, a rising biotech, and a commodities play look on the charts. And we will start with CSL, the bluest of blue chips, or at least it was. After hitting its high in late 2024, languishing through 2025 and continuing the sell-off sharply in 2026, could the new financial year hold promise for the original Aussie biotech? David Bird from Mastering the Markets weighs in.
From there, we've now had a very healthy correction. And what it's actually done is corrected the whole last bull market from 2003. And you can see those little red circles there. There were gaps, okay? And those gaps tell a story. And those gaps, those first three gaps are what's called a breakaway gap. So what they do is they gap down on really bad news, and then the market continues to sell into that news. And what you'll notice is that the price never goes back to fill the gap. The very last one, you can see there's something different, and this is where you can start to see a change of character in the price action to the chart. So that chart right now, you can see gap down, and now we're coming up to fill that gap. That's what's called an exhaustion gap. So what happens is it's gap down on really high volume. It's then the market has used that as a buying opportunity. That's also a very key Fibonacci zone. It's the Fib 500, it's the Fib 3 to 3 extension zone. So it's a key technical level where buyers should step in as well. And yeah, and it's showing massive signs of life there right now.
And from the big end of town to an up-and-comer that has also not been without sell-offs in 2026. TLX Pharmaceuticals, though, has seen its share price rise 50%. Can it continue?
September 11th is the key date for that approval, and the market's kind of waiting for that date. But they're not waiting too long because technically TLX looks absolutely amazing on the chart. You know, MPC has been buying TLX heavily on the way down, and we're adding on the way up now. And you can just see it's past the April and May highs. I think 1607 was the key level. It broke through that 2 days ago, and now here we are at 1720, which is kind of like the second half of last year's high. So we're now in, well, I wouldn't call it blue sky. Back when it was on its run and it was trading, like I think $40, oh there you go, $30 at the time. You know, basically the market was pricing in their sort of their imaging business, and you know, giving zero accreditation to the whole new sector here in radiation. You know, we're at the start of what I think could be a decent run for biotechs in general.
Switching sectors totally to a taxpayer-backed resources company which recently inked a rare earths deal with a global automaker. Michael Gable from Fairmont Equities says while that announcement was light on detail, the company is in the right place at the right time, with the charts looking ripe for further upside.
Obviously, ILU is sort of in the right space at the right time. They had a couple of good announcements last week. You know, they do have access to government funding. They have signed an offtake agreement with a major car company. But you know, in that latest announcement, it looked as though, you know, they were just missing a bit of information. They didn't tell us about the pricing. They didn't tell us who the agreement was with, and it looks like the share price has fallen back a bit, but it's now trading around that $7 level. There does seem to be some good support around this level, so I think, you know, potentially investors could use that as an opportunity. So I think around these levels, I'd be happy to buy ILUCA.
Well, that's it for this week's edition of the Charts to Watch. Join us for more technical talk next week. In the meantime, happy trading.